Okay, in our last video we were long from this top blue line here, and we're currently still long here. Okay, I'm leaving the New York session, and as we start to get further and further into the evening and the next day, we see the price start to move down back below our entry, across and through this particular channel, and stop us out right here. Okay, so we got stopped out, and we could be very pessimistic and look at this and go, oh my goodness, it stopped us out, and then look where the market went. It continued to go on upward. But that's not really a good way to view it, because it does happen. Getting stopped out is a natural part of trading. If you can't stand to be stopped out, like ever, personal suggestion is don't trade. The most important thing is that the sum total of your winning trades outweighs the sum total of your losing trades, and that's including transaction costs, of course. Remember, Rome wasn't built in a day, and your trading fortune will not be either. Okay, so you see it move up here. Could be real frustrating, but again, we don't concentrate on that. You look at it, unless we're planning on getting back in and entering or something along those lines, basically that trade's over. There, we're stopped out of that, and that's the name of that tune. You can see here, that looks like an interesting line right here, most likely driven by some type of news, but a big spike downward, back down actually below our entry point here. Okay. Now let's take a look at something else that'll give us some additional perspective. Okay, we're back. Now what I've done is I've taken the chart and I've changed it from a 1-hour chart to a 4-hour chart. So we're looking at 4-hour candles here. Okay, and we want to get a little bit of perspective on what happened when we were looking at just one time frame, that single dimension. And here we are back on the 10th. Okay, we were here at this particular entry point. Now, looking at the 4-hour candles, you have to ask yourself, is there anything that would make you have an interest in entering at this particular point? And you can look and say that this is, a hammer-like formation down here, and that this particular downward trend was losing momentum, and that you could draw, a line underneath here and find a level of support. Also, that you could put your stop on the other side of that wick right down here and be okay. But as that trade progresses, see, this is something that you might not have done based simply upon the hourly charts. As this trade progresses, you can see, things going sideways, essentially. Not much happening there. Things still kind of moving sideways. And then we have a push back down, test of the lows, and then a move back up from here. It's just, again, additional perspective that a larger time frame type of chart would give you. As you can see, what we've basically been in has been a downtrend here, and then the downtrend exhausting, and perhaps the formation of an uptrend here, which may make an actual good entry point at some point in time. I personally wouldn't be entering right now. Just, it's a length of the bars type of thing, but we can take a look and see what happens next. Thanks very much. Have a great day.